Good evening. How's everyone doing?
Doing great, doing great.
Good.
Great, thank you.
Awesome, awesome. Well, we'll go ahead and get ready to get started. Congratulations, week 8. You made it to the end, or really to the end of this chapter. And then, of course, the journey continues, the marathon continues. But tonight, we're going to kind of really go through a capstone and focus in on everything that we built up to with the previous 7 weeks. But then also what's next. And we're going to talk a little bit about the one thing and really focusing in on what the one thing should be for you this year and kind of what that next step looks like and go from there. So let me bring up and share my screen. And we'll get going. And really we'll save a little time here at the end. But we're going to be talking about one, scaling your portfolio and putting it all together and building upon each week and building out those next steps and that framework for what it looks like moving forward for you. And so talk about what we've learned up until this point. How do we apply those fundamentals across the board, from the mindset that we started with week 1, setting smart goals and just progressing through everything with the strategies, the focus areas in regards to our local area or the area that we want to focus on as an investor. And then what are those next steps that we need to take to find success? So with that, you guys, for everybody already tapped in, you know who I am. Leading into week 8, and we're building and taking this to the next level to understand in 2025, in the future, where do we want to go? Where do we want to continue to build upon in order to build a generational wealth? And I think, the big thing for me is looking back on my story that when I bought my first property in 2006, is no way my vision that I had for my life as an investor, the journey that would transpire over the next 18 years to end up to where we are today. I couldn't even have dreamed about being here. But it all started with that first deal, with making the first move, being consistent, showing up, continuing to learn, getting out here networking, being able to have that mental transformation to go from broke Johnny to woke Johnny, to be able to do one deal, then stand up, shake off the lessons learned, and then move into the next deal and continue to build upon success, deal after deal after deal. And then you end up somewhere that you never even had a clue existed. And that's what we're talking about tonight with everything that we're leading up to and doing that. But the thing is, a lot of people say, oh, yeah, well, maybe you're just lucky. You were in the right place at the right time. But the thing is, luck equals preparation plus opportunity. Action is the foundational key to all success. And the thing with it is, like, there's no like secrets. Yeah, you get some of the information when it comes to tactics and doing certain things. But at the end of the day, the thing that separates those who achieve success and those who don't is just, the ones that are they're successful, they don't quit. They don't stop too soon. And the thing is, like, there's so many people that start investing, they start wholesaling, they start fixing and flipping. And as soon as they hit some piece of adversity or someone hangs up in their face and they make the decision, hey, it's not for me. And they stop. But the thing that separates those who get there and don't is it's not something special, because guess what? Most people aren't that much talented than you. They just don't quit. And the thing that you have to realize is figure out what are the right actions that you need to be taking in order to be successful at this thing. And I think, looking back, we started with mindset and understanding how to have that transformation. I talked about Tony Robbins and how he, psychology is 80% of success. The skill set, the actual talent, it makes up the last 20%. It's important, but it's not the most important thing. And so being able to have that mindset and understanding the goals that you're going after from a financial perspective, it sets the foundation for everything that you're going to do after that. Because guess what? How are you going to start a race if you don't know what the finish line is? How do you start a race if you don't know where the finish line is? How do you go on vacation if you don't have a destination already picked out and chose from day one? And the thing that we have to understand is if we want to be successful as a real estate investor or just an investor in general, and we want to build that passive income, we want to have a diversified portfolio, then we have to have a financial goal in order to get there. And the thing that we understand now when it comes to real estate, market research and having that investment strategy on the particular real estate asset class that we want to focus on really is going to give you that vehicle to get you there at the right time. And guess what? And it's going to get you there in a safe and risk adjusted way. Because the thing that we have to realize is when we look at the markets, we got to understand and be true to who we are as a real estate investor, as an investor in general. Does my approach align with my risk tolerance? Am I going to be able to execute this 3 months, 6 months, a year, 5 years from now? Is this something that aligns with my goals? Because if you're not going to be an active investor and you're not looking to do deals for the next 5 years and flip one house, then maybe flip 3 houses, and then maybe I'm good with flipping 3 houses a year for the next 5 years to build up the wealth to get to that plan. Or being a passive investor, I'm going to invest in one syndication deal per year, or maybe 2 deals per year. Then year 3, I'm going to look to become an active investor. I'm going to find my own deal. Maybe that's the year I retire. And then now I'll become more active and do this full time. And so you just got to figure out the investment strategy that you want to, how you want to approach this. But then also you want to do that market research and understand the area that you're investing in. If you're a passive investor, you want to focus in on the team, the deal, and understand the market itself that the deal is in, and make sure that you're comfortable with the risk for that investment before you move forward. Then the next phase is, okay, now how does everything else align with making you successful in that area? So looking at the networking. If networking is a big piece of what you're doing, and it should be, with understanding, hey, do I need to find people to help me raise money for deals because I want to be on the active side? Or maybe I need to network with more brokers so I can get more deals that way. Or maybe I need to network and find more operators where I can invest my capital in more passive investments and just get more exposure to operators that are doing syndications potentially, or buying multifamily deals or self-storage deals in the area that I want to invest in. And then being able to just do that underwriting, go into the deal analysis, understand what's the cash on cash return that you prefer, the IRR, the internal rate of return that you're looking for in the deal. And then understanding, hey, is this a long-term deal? What's the risk? Is it a value add strategy? Is it a class A new construction that doesn't have a lot of risk, doesn't have a lot of maintenance? Or is this a new development ground up construction that's a little bit more risky? But the risk and the reward, they weigh out with the long-term results, potentially, that the returns that you can have. And so being able to go through and underwrite and analyze the deal and make sure that it is a good investment for you, and then really diving into the financing insights and understanding the letter of intent for the financing for the deal if you're on the active side and you're going through. But then also as a passive investor, you want to understand what type of financing this deal has. And so one of the things that we've seen most recently from 22 to really through 24, as interest rates increase, a lot of passive investors didn't understand when they got into these deals with these multi-million-dollar deals that the debt was adjustable rates. They had adjustable rate mortgages. And so we saw the ramifications of that, back in the 2007, 2008 timeframe, when nearly half of Americans had adjustable rate mortgages, and that caused the foreclosure crisis. And so the same thing now, it happened in commercial space where you had a lot of people who were extremely aggressive and had lower initial interest rates, but when interest rates started resetting, the Federal Reserve had to increase the federal funds rate just to battle back inflation. That a lot of people got caught, and the rates adjusted, and they weren't able to afford their mortgage payment. And so being able to understand the financing insights and the terms of the loan is really important as an investor. And then being able to take consistent action. Once you set this plan, you get all the foundational pieces aligned. Now you have to measure performance, track your key performance indicators, and then continually take consistent action through whatever your goal is, whether you're on the active side or you're on the passive side, with being able to see your goals through to the end. The blueprint checklist. That the big thing is why? Why are you here? For me, it's for the time freedom to spend more time with my family. It was funny. I had a conversation. Was it? It was actually yesterday. It was yesterday. With longtime family friend. We were chit chat. We grew up together, and he was like, "Man, it's crazy. You're right there about to retire." He's like, "I remember when you started all this real estate stuff, and you told me your goal was when you walked away from the service that you wanted to be able to walk away and not have to work for anybody else again and be done with it." And he's like, "You did it, man." And it got me to thinking that our goals evolve and change over time, which is fine. But the thing for me is like, okay, now that I have all these other goals and looking at creating businesses, helping more people, he said, but at the fundamental, when I started investing in real estate, the goal was to be able to have enough passive income where I don't have to go out and work and trade my time for money. But you have to understand and define what is your why and get crystal clear on it. And how do you build to get there? And what's the time frame that it's going to take you to get there in that process? And I would tell you, when I started the journey, I didn't have that clarity on how I was going to get there. And, I thought it was just going to be single family, fixing flips, keeping a few here and there as rental properties and paying them down over time and doing that. But I had no clue that multifamily was going to be part of that equation. But the thing is, you have to figure out your why. And for me, being able to spend that quality time with my kids was the number one reason why, and just being there for my family. Understanding the financial goals. Are the goals that you set for yourself smart? They got to be specific. They got to be measurable. They got to be attainable. They got to be realistic, and they got to be timely. And you have to set that standard for yourself. When we talk about market research, have you identified the right area to invest? Have you been able to go in, underwrite the zip codes to look and see, hey, how's the crime in the area? What's the median household income? Are there jobs moving to the area? Is the population growth in the area projected from the census data in 2030? Is it going up or is it going down? All these things that you want to understand for the area. Is there new construction being built in that area? Is there any type of progress that's happening from a business economic perspective that will make you want to invest in this area long term? And so you need to have that information. And we talked about some of the resources online where you can find those things, but then also, a great place to get that information is being active in your city council, that a lot of the decisions that are happening in the near term, but then also long term, those decisions are being made in those meetings. And then identify, what is your real estate investing strategy? Is it buy and hold? Is it flip? Is it burr? Is it buying multifamily apartments? Is it being a passive investor in these deals as a lender, or maybe as a partner in the multifamily deals, and figuring that piece out? And then your financing plan. Are you looking at the VA loan, conventional loan? If you're getting like a 2, 3, or 4 unit deal, you can use your VA loan or FHA financing for those, or a conventional loan as well too. Or, are you looking at like some creative options, maybe bringing in a credit union to give you a commercial loan on a larger multifamily deal? Or you may be looking like a private equity fund where you can get bridge debt put in place to get the deal done. But the thing is that we have limitless options when it comes to putting the financing terms together. But the thing is, we have to continue to focus on having a win-win deal put together when it comes to the financing that works for both parties at the end of the day. And then understanding what's your first and next move that you need to be making, and then now moving out and taking action on all that. We also talked about my 4F framework. So find, finance, fix, finish, and being able to put those things into place with the 4F framework is going to, guess what, put you in a position where now it's a continuous cycle. We call it the OODA loop, where now you're continually being focused on being able to, the velocity of money, get that money reinvested, go through the process one deal at a time, and then continue to repeat. And I gave a great example of, buying my first 18 unit apartment building, going through the refinance, taking those proceeds, then, the next year, or actually the same year, going in and buying 3 more complexes, and then another one the year after that, and being able to reinvest that deal now. And we're right now on the cusp. We signed last week the LOI to refinance those units, and now we're going to refinance those and get ready to go over and do it all over again. And it allows you to scale. We talked about multifamily properties, commercial property syndication. Just it allows you to see larger returns, so larger deals. larger equity plays. And I'm actually going to talk in our coffee meeting, our millionaire coffee hour that's coming up tomorrow morning. We talk about the deal where we laid out, and we actually increased over $1 million in this year already from just increasing rents in with our leases that we had in place that were month to month. We're getting those locked in onto a long-term 12-month leases and increasing the rent, but then also adding in a $25 uh, rub, or being able to charge for the water sewer, which we call rubs, with the reimbursement of utilities, and being able to do that and showing how you increase the value of a property by making those changes. But it allows you to scale a whole lot faster with multifamily when you have more units versus on a single family type of property. And then building your team. It takes a team, it takes a team, it takes a team. And guess what? Don't be afraid, because you're not going to always get it right, which is fine. That's part of the process of learning. But you have to be smart. You have to be able to depend on the right people, and you have to vet the right people when it comes to your contractors, your partners, the investors that you bring in on your deals, also your property management companies, your attorney. All those things come in together where you have the right team. And that's one of the things that I love with like the community, with having the right people. So having a CPA that's focused on real estate, having a financial advisor that understands how real estate is part of the overall diversified portfolio, but then having an estate planning attorney that has the trust that helps you protect your assets and everything that you work hard for. But then also having other team members like self-directed IRA custodians that help you leverage retirement accounts, help your investors potentially leverage their retirement accounts to invest in your deals. But having that holistic set of individuals on your team, as well as brokers, and being able to bring brokers in and have brokers that are bringing deals and funneling deals into you to help you build wealth. And that's the thing of having a team, that everybody has their own function, that they're good at their one thing, and it all comes together to make you successful at the end of the day with your investor. And so that's what it means when having the right professionals aligned to help you find success. So we went through it in the workbooks. You guys had your scaling plan template where you had the property acquisition, where you go through, understand your property type, the number of units, the desired location, and your initial investment amount. But then also looking at that financing strategy, whether it's bank loan, private funding, if you're going to bring in a secondary, if you're going to have an HELOC, a partnership that's going to help bring in some of that down payment capital that needs to be allocated, and then understanding the time frame that you need to put that in place. Then having those cash flow goals with, hey, what's your monthly income target passively that you want to have? What's that looking like annually? And then what's your return on investment when you invest your money? What is the goal that you want to achieve? Building your team. We just talked about that, but understanding who do you need to add on your team, because some of these functions you may be able to do it yourself. Like for my deals, I do acquisitions, I do asset management. I run everything on point with getting the financing put in place, as well as running the contractors and doing the project management aspect of it. Probably could have one or two partners on my team that could do some of those functions, but for me, I've came up and had experience with that, and so I naturally gravitated in putting the deal together myself, that I manage those roles. And so that's something that I look at on my team, going forward. Like, okay, where can we look at doing bigger deals, and where can I outsource some of these requirements elsewhere? But understanding the key roles that you need. If you're not going to be a property manager, you need to have a good property manager. You need to find good contractors, and you need to just continue to find everyone that you need on your team to be successful. And then those milestones, 3 months from now, 6 months from now, next 12 months, the beginning of next year, where do you want to be? What do those milestones look like? And then understanding the key performance indicators. So return on investment tracking, your occupancy rate, your cash on cash return, your debt service coverage ratio, your NOI, your net operating income, and then your net operating expenses. These are some of the metrics, the top metrics that you want to look at on a monthly basis with looking at your deal and going in. And so one of the things that you really go in and do, that being able to have those KPIs, and that's something that we're going to be setting up too, where we're going to have we're looking to bring in and have asset management at least once a month. And I'm going to share with you guys my asset management and how I go through and manage my properties and kind of look at the data, what are the trends that I'm looking for, and looking at indicators. Now I can have informed meetings with my property manager when we have our monthly meeting, or if we meet on a weekly basis, if we have active projects that's going on and I need status. But being able to measure the data allows you to make changes, adjustments to the day-to-day operations, where now you can increase your return and lower your expenses. And then your profit summary, understanding where your total profit is, understanding the impact to your taxes and expenses, but then also understanding your reinvestment goals. Are you growing your portfolio, increasing income? One of the things that I was talking with another investor about last week was about diversification and being able to go and rebalance. Like if you've been invested in the market since 2023, the stock market is going up 50%. Stock market is going up 50%. So there are a lot of people who have exposure to the market. They need to rebalance. Like now they have all this money in the market, but when the growth that has been, I would say extraordinary growth that, historically, that they need to take some of that profit and reinvest it in other asset classes like multifamily real estate or real estate in general. And so that's something that you need to look at, like, okay, what are your reinvestment goals? How do you balance your portfolio over time? And making sure that you understand where all your allocations are so you can rebalance and you're not overexposed to risk just because you had a lot of gains in one area and you didn't rebalance your portfolio. So you want to understand the main goals, your preferred property types, and then those target locations on, hey, when I get this X amount of capital built up, this is where I'm going to go and deploy it to. But the big thing is what that I learned over the years and with scaling and getting into the multifamily space, that it just allows you to grow wealth quickly and without proportionally increasing your workload. Like it's crazy when you can make an impact where you say, hey, yep, we're going to charge $25 for the water and sewer instead of us paying it. And you make that one decision, and now it adds over $300,000 of equity to the deal, just from everyone in the complex paying $25 on 1 March. That now, boom, just like that, you added that much value with $25 per 84 units. Or you go through and look at it like, hey, for all our month-to-month leases, when we have 40 leases, let's increase everybody on average $75 to $100. And now when you look over that many units, then now you've really, really moved the needle in your net operating income. And so it allows you to scale and grow wealth quickly where you don't have to go chase deals. And the thing is, like now, it's like you get enough real estate in your portfolio, and you look at ways that you can increase income, reduce expenses, and maybe now you only have to buy a property every 2-3 years, or really a really, really good opportunity, just because once you make that initial investment, you're hitting your goals, you get that passive income goal, you hit it. Now you're going to the next level and defining what that looks like, and you continue to just manage it as you go. And I will tell you, a strong team allows you to manage and maintain a large portfolio efficiently. A lot of times I have a conversation, I always get asked like, man, how are you still active duty? You got a wife, 3 kids, you got your investment portfolio, got an education company, you're helping people. Like, how do you find the time in the day to do that? And it comes down to having a great, awesome team across the board that help you get the day-to-day tasks executed. And it hadn't always been that way. I've shared with you guys multiple times, that I had to fire my first 2 property management companies in Montgomery just because it didn't work out for various issues and reasons. But guess what? Once we got the strong team in a place, that we've been reaping the benefits from that ever since, with getting empty units leased up quickly, and just the performance on being able to have open communication on ways to increase the income, how we can manage expenses, and all of that. But it all goes back to a strong team. And that's why I really like to emphasize, you have to build a team and you have to be a strong leader to make this happen and do it. And the thing is, like, once you pick the right people, then you just sit back and measure performance. If you're a passive investor, you're really going to focus in on someone that has the operations, that has a strong team, that has experience, that now you can safely invest your capital and minimize your risk by having the right team. And the thing is, like, having access to larger deals and diversification across multiple properties, it just allows you to be protected. And I've seen this firsthand when picking up my first apartment complex because they had hurricane damage. That was one of the reasons why the two couples they wanted to sell. They had issues with the contractor, ran off with the money. They had other businesses, and so it was a pain. And so the thing with it that being able to diversify, you don't want to have all your assets, or like as the analogy says, you don't want to have all your eggs in one basket. Whereas that you could be your whole entire portfolio is in a hurricane prone area, and now you're completely wiped out when a big storm comes through. But maybe it makes sense for you to have some assets in Panama City, maybe Montgomery, Alabama, maybe Northern Virginia, maybe something in Texas. So now, and maybe you have different operators. And so now you're diversified geographically, you're diversified from different operators. Whereas if something happens in one area, as the operator side is on the geographical side, you're protected. And so now that's the thing that you have to look at with just being able to look at how you can just diversify across the board and continue to reap the benefits of having that diversification. Power of consistency, those small daily actions, they compound over time. Progress over perfection. Like 80% of something is better than 100% of nothing. Like you got to take action, and it's the hardest thing to bet on yourself because we as creatures, that we look for comfort, we look for security. But guess what? If you're stretching yourself, if you're going after your goals, then it's going to be uncomfortable. If you're changing, it's uncomfortable. And so that's the thing that we have to get past, that we have to understand that as we move out, that you have to walk out in faith because it's just like trying to walk up the stairs in the dark. Like you put one foot in the other, but you're not going to see the next step. And just having that faith that it's going to be right there. Or driving at night where you're driving just 50 feet at a time with the lights that are in front of you. You only can see thus far. But guess what? You have faith that the road is going to continue up front and it's going to be there as you continue to drive. And you can drive all across country at night, hundreds and hundreds of miles. And so the thing is, like, you understand that being able to walk out, step out on faith, you lower your risk by the knowledge. The more you get comfortable, the more you underwrite deals, the more you go to these meetings and you learn about what's happening in the city, the investment that they're making, the better off that you're gonna be, the more confident that you're gonna be in the decisions that you make. Because the thing is, people have been making millions and millions of wealth in real estate for centuries, getting rich. The reason that you haven't done it is because you don't have the information and you haven't taken the action like other people have. Everybody starts with their first deal. Like they don't just wake up and go and syndicate a skyscraper building, but they take consistent action. They start in one area and continue to build up. And so that's what we're all about here. And that's why you're here tonight. That's why you've gone through with week 8, that you ended up here through all the progress that you made, is continue to take action and building upon that action to find your success. And the thing that you have to ask yourself is, what's that one thing I can do today to move closer to my goals? One thing every day. That it doesn't have to be for an hour, it doesn't have to be for 5 hours, it can be just for 10 minutes, 20 minutes. But continue to make that progress and build up over time. So what you have to ask yourself is, what's the one thing that I can do such that by doing it, everything else will be easier or unnecessary? And you got to figure out what it is. And, the founder of Keller Williams, that he wrote this book, The One Thing, that this is based off of, but it's really helping you narrow down on what it is that you need to do in order to be successful. In order to get those extraordinary results, they are directly determined by how narrow you can make your focus. Like, everything doesn't matter. Like, if you're trying to be the best basketball player in the world, you probably don't care a whole lot about baseball. You don't care about, what's happening over here in hockey. You don't care about what's going on with the news downtown. That you're focused on, wait, what time does the gym open? What time does the weight room open? And how can I be able to get better at my trade and become the best that I can be? And do that. But to be able to have those extraordinary results, you got to narrow your focus. And so we're going to break that thing down. So priority number 1, to achieve one thing, my one thing for this year, it's going to start with your knowledge. It's going to start with your information. being able to get more investment knowledge, building up that acumen where now you understand the relationships between the different strategies, you understand what works best for you, and how you can take this strategy and dive in to build wealth. With that, so that looks like if you're going to focus on that, strategy one could be listen to one real estate asset management or real estate operations book per quarter. And for me, and this is a summary of mine that I'm focusing on. And my one thing for 2025 was to focus in on building $2.2 million of equity in my multifamily deal in Montgomery. And so that's looking at leasing up the 3 units that we have in the 84 unit complex there. We're getting those 3 units leased online, but then also increasing all 40 of our month-to-month leases that we have, as well as implementing that $25 RUB fee that we're going to, for the water and sewer that we're going to add in there. But the thing that I really wanted to focus on is like, okay, how do I become a better operator? How do I get really, really good and become world-class at asset management? And so there's podcasts out there. One of the books that we're coming up that we're focusing in on in the book club that kicks off this Thursday night is the 15 Invaluable Laws of Growth. And so being able to dive into those things are going to help me from an operation perspective. Strategy 2, listen to one real estate or wealth building podcast episode per week, real estate syndication show. There's actually a couple of shows that I follow that are based off of strictly on asset management. One of them is shut down, but there's I think a couple hundred episodes that you can go back and listen to. So I'm really focusing in on that. Newsletters. We got some newsletters that we're going to share with you guys in the community. You can focus on that can continue to help you get information, get insight. I shared an article from CoStar that just talked about the maturity issues and challenges that banks are having right now with assets that have loans that are maturing, but they've reduced in value. And so being able to continue to get information from different real estate newsletters, and then being able to time block 1 hour per week to look at deals, evaluate market trends, and then document my lessons learned. That's the big one for me, is really document the lessons learned and going through. One of the things that I started keeping on my phone was my blessings for the week and capturing that. Hey, what was my blessings that, things that were going good, that looking at and just capturing. I wanted to kind of have this list to go through. And at the end of the year, to go back and look at all the things that I'm thankful for and the blessings that I received. And just when you start adding up the little things, it's like, man, it's like 20 things that are like, hey, this went my way and I'm thankful for it. But being able to have these strategies on how you can get to that priority number one to achieve that one thing. And then strategy number 5, attend one educational or networking event and just getting out, speaking with people. I was fortunate enough to sit on a couple of panels at the Military Creator Conference last week in Orlando. Phenomenal time. Got an opportunity to meet a couple of founders and CEOs for other opportunities with other conferences in Vegas later this year. I was super excited about that, where I got asked to come out and speak and share. And it was one of the craziest things that I was telling my wife that, for about 10, 15 seconds, I was a little intimidated by it, because the thing was, I got invited to come down to the Content Creators Conference, and I was the only person on stage that was talking that didn't even have a podcast. This was done in conjunction with Podfest, which is like the longest running annual podcast conference. And I'm like, how did I end up here and get asked to come here? And I don't even have a podcast. But that's favor. And, and of course, being able to go in and add value and just share just everything that I've learned over the last 2 years. And one of the cool things, I was the only active duty military person. Everyone else had got out or was a spouse of military, but I was the one that was still active duty, that was still going through, that was leading a community and was able to share insights. But the thing is, like, you have no clue where you're going to go and the opportunities that you're going to receive, but you have to take action. You have to get out here, network with people, and be able to, and not be afraid to tell people what it is that you're doing and what it is that you need right now on your journey. Because guess what? Everything that you need in your life, there's a stranger, somebody that you don't know that has it. You need to be doing fewer things for more effect instead of doing more things with side effects. Read that again. You need to be doing fewer things for more effect instead of doing more things with side effects. You got to be doing the one thing. You got to be doing the right thing, taking the right action. Like, sitting in the thing is, if you're running on a treadmill, you're running, it feels like you're doing something, but guess what? You're in the same place. When you get off the treadmill, you're right there in the same place. And that's where we do not want to be as an investor, as a real estate investor, that we want to be doing things that are moving the needles. I see a lot of people, I try to visit with different operators, people that have different communities, chit chat with them and stuff. It is one of the saddest things to have a conversation with somebody that you had the same conversation. You see them a year later, you're talking with them, and they haven't made any progress. You're having the same conversation again. And, and they're telling you, yeah, I'm going to get to it. I know we talked about this investing thing, but man, I've been busy, life been happening. And here it is a year later, and they're in the same place. Don't let that be you. Please don't let that be you. Don't let this fall on you where it's just information, education, you don't take action. The thing is that you have to focus on what's most important. And the thing is that hopefully after these 8 weeks, you have that clarity on what the next steps that you need to take for you are, so you can move out and make progress. But now breaking it all down, priority number 2, to achieve the one thing for the year, maximize funding sources, expand capital for new investments. That's one of the things for me, to go ahead and really focus in on adding the value to the property and doing things. One of the things we're doing, we're raising $750,000 to give up 19.99% equity in the company for the deal to go into the next phase. But the thing is, it's like, okay, now you got to have those different funding sources. You got to have those different resources at your disposal to get there. So for that, allocate a minimum of $30,000 for investments this year. That's one of the things that looking at, it's like, okay, what are the other things that I need to be reinvested into? And as we move forward, strengthen relationships with key advisors, including CPAs, financial strategists, real estate attorneys, lenders. I need to find more people, to continue to grow my portfolio, but then also for the community, bring them in, people that we vetted, people that have a track record, bring them into the community where now people don't have to go out and search and find these individuals. Setting up self-directed IRAs, solo 401k vehicles, to diversify real estate investments, to get more capital out there deployed and putting those things in place, but also explore creative financing strategies such as different partnerships, seller financing, and private lending for larger deals. And then building up a reserve fund. Always have that reserve fund to make sure you have enough to backflow operations, renovations, and any unexpected costs. Because guess what? Unexpected costs happen. And that was one of the things that I already knew. But one of the things that happened to us with our 12 unit in Montgomery, we had vandalism, was the October 2023. And the thing with it was the insurance wouldn't cover it because occupancy was lower than where it needed to be. Occupancy had to be at least 32%. And since it wasn't 32%, we had cleared everybody out and was doing mass renovations. They didn't cover the damage, to the HVACs where people broke in and stole copper. And so we had to take it out of high. But that's why you definitely got to have cash flow reserves. You got to have those cash reserves that can step in. Big is bad is a lie. Big is possible when you connect the dots. Like every marathon, it starts with one step. Like to get there, you just got to figure out, how do you take that? How do you eat an elephant? You take the first bite. The thing is, you have to understand that bigger deals are okay, but you got to figure out how do I get it done? Who can help me get it done? Who has experience getting it done? And then from there, just continue to execute. So to achieve the one thing for the year, priority number 3, hey, build wealth through relationships, networking, and quality investments. So guess what? Always have your investment pitch deck on what it is that you're doing. With private lenders and partners, that's one thing I need to add to the community. My most recent pitch that we did with investors, and I had the opportunity to pitch a wealth group here in the local area this past week and made a couple updates and actually made an update for operations for January with the latest I had got from the property manager to include in there. And so just share that. You always want to have that deal deck on, hey, a current deal or a past deal, and this is what we're kind of deals that we're looking for, where you're always raising capital. You're always sharing what your vision is. So when you have a deal, you have people that's ready to go. and they already know what type of deals, the area that you're focusing in on, and the potential returns that you're looking to provide them. For me, looking to participate in multiple advanced property analysis workshops, masterminds. I'm all about continuing to grow and looking for that next mastermind group to join, to connect with experienced investors. So I got a couple on my horizon that I'm looking to. I got one that I'm in that I need to be more. I would say I need to participate in more. I actually got a chance at lunch today. I just so happened shot out before a 12:30 meeting that I had, and I looked at my email and saw that they actually had a 12 o'clock meeting today. So I sat in for 30 minutes, and I actually heard three pitch presentations from founders that were pitching the group, which the majority of us I think were accredited investors to invest in. One was like I would say high end dog. Yeah, I think it was dog supplements. Was one founder company that they have their veteran spin on it. And another one was another fund that buys Dollar General stores across the U.S. I learned a little bit about that today. And so they have a fund. They've been buying Dollar General. I think this is their fifth fund since 2016. And one of the things that I didn't know about Dollar Generals is so they're independent owner operated. And so being able to go through that, you don't have a lot, just because a lot of them are rural areas, you don't have a lot of hedge funds or large Wall Street funds that's looking to buy Dollar Generals, just because they're usually in more rural areas. But they're looking at the profit margins and the income is generated. They're a solid company, and they offer decent returns. And so that's their strategy. They raise capital and they go and buy Dollar Generals, and then in 5-6 years they go and sell the whole portfolio off and pay their investors. And so that was a cool pitch that I was able to listen into and learn a little bit about their business model with buying Dollar General. But being able to just be in the right rooms and mentorships, like it just allows you to get exposure to different investments and different opportunities that are out there that you would have had no clue about if you weren't in the room. Acquire 2 to 3 income producing new development value add properties to enhance cash flow equity. So always looking for deals and being able to be in a position to continue to grow your wealth and continue to put investment deals together. And so that's the things that we're looking for. And then time block a monthly portfolio review, assess progress, and strategize for upcoming opportunities. And then being able to understand success is built sequentially. It's one thing at a time. It all starts with the first deal. We don't care about deal number 10. We need to care about deal number 1. Getting that first deal, the first deal for 2025, first deal for 2026, first deal for 2027, and just continue to build upon that success. And then the thing with it is being able to understand, one, you got to find accountability. You got to have somebody that you can reach out to get those questions answered, to reduce your risk, to leverage somebody else's knowledge and hold you accountable to continue to go through and track your progress. The thing is, like so many times, like we just start doing stuff and then we end up somewhere that we don't want to be because we weren't tracking the things that actually matter. This is when I have to work on celebrating your wins. Like we take for granted, like the successes that we have, that there are plenty of people who aren't taking action, who haven't done anything like this. Like over half of the United States don't even have money set for retirement. We're talking about retiring, and you may not be where you want to be, but I'm pretty darn sure that you're probably ahead of a lot of people. And to guess what? The majority of this thing, the crazy part is like where I'm at with my portfolio, like the level of growth, the majority of it happened the last 4 years. I bought my first house at 06. And it really scaled and multiplied just the last 4 years. The thing is, it should not take you 15 years to start seeing growth and being there. Like being able to take the knowledge, it's going to accelerate your growth where you get there a whole lot faster. But guess what? You just got to take consistent action and definitely celebrate your wins as they happen. And don't take life too serious. Don't put too much pressure on yourself, and have fun along the way. And that's what I really love about what we built with REI Genius, that we're doing life and investing with other like-minded people, seeing people win, become the best CEOs of their last name, and it makes it that much more joyous. Everyone's journey in real estate is unique, shaped by personal goals, challenges, and opportunities. Like you think that, yeah, I'm starting here, but like everybody started somewhere. And like everyone here on the screen, excuse me, they all started with their first deal. You know, whether it's leveraging your self-directed IRA, it's like getting in the room and starting when you're like 21 years old, or it's understanding concepts that you didn't even know you could actually apply to real estate to do deals. You know, but the thing is, like, you just have to get started and understand the challenges that you faced up until now, the challenges that you're going to face in the future. You're not special. I'm here to tell you, you're not special. Like everybody's had challenges, everybody's had setbacks and failures. The thing is, like, we found our way through them, and we continue to move forward until we find success that we're looking for. And you can be the same way. And the thing is, like, imagine if you had started years ago, how many units could you already have today? Like, it's no secret. Everybody, we talked about the Gallup poll, where like the last 14 years, real estate has been voted the number one long-term asset. Like everybody knows that they need to invest in real estate, but they don't know how to get into real estate. They don't know what's the next move to do. And then the next thing you know, 10, 20 years go by and they never invest in real estate. I can't, if I could count, probably I can't count on one hand on excuse me. If I had a penny for like every conversation that I had, I'd probably be a little bit more wealthy for sure. Or how many people are just like, yeah, I got into real estate, I sold a house 20 years ago, I should have kept it and never got back into it. And it's like the stories go on and on. Like everybody knows they need to invest in real estate, but they don't take the action, they don't show up for themselves, and they don't figure out how to make it happen. But that's not going to be you. And I say this all the time: education without execution is plain entertainment. Like, you can't get the information and do nothing with it. You got to move out and you got to make this thing happen. Just do it. It's the framework. And at the end of the day, commit to the process. As we wrap up, I want you guys to kind of think through, hey, what's your 90-day action plan? What's the muscle movements you need to be making happen in your life? What's the monthly goals that you need to be hitting? Continue to learn, hey, what's those conferences that we told you to lay out? Hey, what's the event that in your local area that you're going to go to, the local RIA meetup, and continue to learn and adapt. One of the things that, I've learned over the last couple of years from being in these different mastermind groups that I'm a part of, it was like, okay, what does success look like? What do I wish I had as I was growing up through my journey and helping? One, it was like, okay, the $1 Million Book Club, that's there to kind of talk through books that other people's experience to kind of help level up on, hey, my take on it, but what other people's take is. Because I'm a true believer that iron sharpens iron. And just being able to focus in on the right material, the right information that can help you grow on your journey. But then also, having a game plan. Like for those that's serious about it, I got a framework to get your next deal in 90 days that we have laid out there. And then for the Pro Masterclass, as you progress through that, with just the whole secrets of laying out the systems that you need for a business and putting that all together, and continue to help you learn and adapt as you go through.
We renovated a pool. We had black mold, and
this is my first deal.
Rebuild the second level of the house, the basement level of the house, which the kitchen was in, with how it was set up as one of those little rambler houses with the first level being there with the kitchen, which I had never seen before, because growing up down south. And so it's really cool. But I got my estimates up front with the mold remediation and with the pool and everything, got that bounded with the cost and understanding that. And man, it was an act of faith, really, to kind of step out there and not having the experience managing the construction, doing the work like that, but still having the confidence in myself that, come hell or high water, I'm gonna figure it out and get it done. And we went through that project, and it was funny, on that first deal, my hard money lender made more money in the project than I did.
And the thing with it is, like, you got to figure out and make the decision, the commitment to yourself. Like, it's going to be scary. Like, we've all been scared with that first deal. You're going to learn things that you didn't know when you first took the deal, but you got to make sure that you show up and just get it done and do it. And the thing is, like, at the end of the day, we don't have as much time. We don't have as much time as we think we have or that we need. And, the thing that we talk about a lot is the cost of inaction. Like, you not being able to do one deal a year where you can make $20,000, $30,000 in a deal. it's costing you 20, 30. If you have been doing one deal a year for the last 10 years, you paid like 200 to $300,000 by you not taking action the last 10 years on doing things. By not going out there and getting that multifamily deal, you're costing yourself $3,000 a month, $4,000 a month of passive income that you could have, but you're not taking action on what it is that you know you need to be doing. And so that's the thing that you have to figure out is going through and make that decision. And we all could have started. If I had known about multifamily, I probably could have became a millionaire before 10 years, at 28 instead of 38. But the thing is, we can't have regrets. I was watching a video today from an interview that Michael Jordan had done. And, one of the things that he said, he never looked back and had regrets about anything, that he's always competing with himself. He's always looking to be his best. And with that, he can live with the results, because guess what? You can't have success with failures, because if you never fail, then really you don't understand what success really is until you actually taste defeat, taste failure, and build off that failure. Now it makes that success that much more sweet. And so that's the thing that we do. And once you end up the journey, who knows where your journey would take you? Like, going through house to house and fixing and flipping house and building a whole business around it. Or maybe it's just doing a deal passively, growing your wealth, and it's a little bit more subtle. But the thing is, you got to figure out what it is for you and what's going to drive you and your passion to hit your goal and the reason why you're doing it all. And just embrace your journey, because I am a true testimony. One deal can change your life. And success is the sum of small efforts repeated day in and day out. Like, it's not sexy. It's not the cool stuff, but like, you're just going in, you're doing basic math, you're looking at a couple spreadsheets, and you're just watching the numbers go up, and the more money come in deposit each month, and it gets a little bit, it's like, okay, like, what am I going to do now all this time? Because it took so much work on the front end, but once you get everything operating as a well-oiled machine, that guess what? You can spend the time with your family. You can work 2 jobs. You can travel. You can do whatever it is you want to, and the real estate is going to take care of you, because you had the right team, because you bought the right deals, and because you took the right actions. And so with that special invite, one of the things that we kind of kicked off, coming out of the last holiday, was revamping everything that we're doing with the community. And so with that, with the QR code there, with school.com/REIGNs, with a lot of the tools that I talked about, the self-paced academics in there, the book club, the $1 Million Coffee Hour, and all the monthly underwriting and asset management and the coaching Q&A, like, it's there built in place for those that are ready to go to the next level. And so I offer that up to you guys. It's $97 a month. Check it out. You guys get a 1-week free trial. The next $1 Million Coffee is tomorrow, Wednesday morning, 8 a.m. And we're going to have different guests coming in that I'm inviting in that are going to be talking about different topics. And in our community, it's all about growth. We're looking to bring in a couple of brokers. We met last Monday, was the first one. And so we're looking to bring in a commercial broker from Kansas City, and then one from the South Carolina area that a couple of the members asked for to bring in. And so we're going to be doing deals. We're going to be continuing to grow. And so if you're looking for a community of like-minded individuals to grow with, and you're serious about building wealth with real estate and learning how to be a passive investor and how to do right deals and get feedback and get information, they would love to have you join up with us in the community, and continue to grow. And, as we wrap everything up, we love to get feedback on how we can improve this, how we can make it better, and just how we can better serve you guys. So we'd love to get feedback. Testimonials are great. Shoot me a message on, if it was good, it was bad, hey, I can improve on this. We love videos as well too, because that's one of the things that I really like, being able to get the word out and have people share their experience where it can help change someone else's life. Because a lot of us, we have the same challenges, the same process to get started. And so it's always cool to kind of pay that forward and share the wealth with other people on just everything that's going. So make sure you guys, hopefully you already have all your blueprint downloaded. You know how to join the next sessions, all that stuff. And then now I'm gonna just open it up for questions as we wrap up. That was all I had for you guys tonight, to kind of walk through everything. And I think Faye's dropping the Zoom link for coffee tomorrow. Definitely join us. And tomorrow I don't have a guest tomorrow. I'm gonna be walking you guys through how we've added that value with the plan for January with the $25 rubs and just how that impacts your bottom line with your appreciation. Cool beans. I'm gonna open the floor.
The coffee hour at 8 a.m. Eastern Standard Time or 8 a.m. Central Time?
Yes, great question. 8 a.m. Eastern Standard Time.
Oh, okay, perfect. Thank you.
Yep. No, you're welcome.
I might have on my snow coat in the morning because it's snowing in Florida, so I'll be bundled up. So yeah.
Yeah, I saw that. I wanted to reach out to my property manager in Panama City. I'm like, hey, you guys prepared? Yeah, that freezing always makes you nervous as a landlord.
Yeah. On your vision board, you had mentioned that you had Florida development projects. So I just wanted to ask, can you share details?
Yeah, for sure. I just got the LOI back last week. We're about to sign and hopefully close on the construction loan here in a couple of weeks. And so that I've had that lot probably, it's been at least 2 years. And so funny story, well, it's not funny. I bought the property and the house already had code violation liens on it. And the crazy part was it was one of the few I went against my better judgment because the real estate agent was like, hey, we got to use our title company because I use my title company like because I know they do the research, like the title policy, we're good to go, and didn't use my title company, and they didn't check the after the hurricane. There was a lot of code enforcement violations for homes that were kind of left abandoned, that were a little bit neglected. And so a lot of times they didn't have official liens on them, but if you go to the court enforcement database, they can go and pull it. They didn't do that. So we bought the house, it had liens against it. And it came up in May, and the reason they didn't reach out to me with being out of state, that my lender got the letter. And they informed me like, hey, code enforcement, this hearing is coming up that we missed the hearing and we got the letter. And that was June of 23. And it was crazy. So now like with Panama City, like it's a small town. And like we went back and forth with the code enforcement guys, and it got ugly. You know, they didn't like the engineer that I had to come in and do drawings on how to make the repairs. Like, I'll show you guys. I put it up on Facebook today. We're doing a whole demo renovation on a property. And I actually walked, because before they tore it down, I went there a month before that and walked the property because I went down there and meet them in person and walk through the property. And like, if you go look at the property that we're renovating right now, we got permits to renovate that is no way they should have tore down a cinder block home and had a demo because of the renovations and the permit. But they jammed me up on that, and it was nothing I could really do. You know, to the point where they denied my engineering drawings with the engineer. He said he had never seen that in his whole entire career, for them to walk that back. And they tore the property down. And I had $130,000 loan on it. And so the thing with it, like I had to take the L, I had to pay it down over time. And so now we've had a lot that's been vacant for a little while. And yeah, and so we're going to build 1,650 square foot, two-story duplex on, so it'll be 1,650 square feet each side, and new construction. So I'm super excited about that. We're being able to resurrect that project from, you know, buying that property that we had, and, you know, being able to make $70,000 to $80,000 profit to, you know, to complete flip of that, where, you know, you have to come out of pocket $120K. And so that was a big, you know, learning lesson with that, and with with that whole process. You know, it was a sore spot for a while for me, just because I know they were doing what they were doing, that it wasn't because of the law and safety and all that stuff that they were talking about with the damage to the house, that it had got personal what they ended up doing. But guess what? It's going to all get rebounded. I'm going to get the last laugh with it. And we're going to turn what they thought was a setback into a setup with what we're doing, with me being able now to get development experience and continue to just grow the portfolio and get another feather in my hat and turn it to good. So I'm glad you asked that because I hadn't really talked about that one at all with that process. But I'm glad to get all that going because everything I've been focused on has been on the multifamily. So this lot has been vacant for a while. And we just got where we are now with getting to the point where like, okay, we can kick that project off where we can kind of, because the thing that I didn't want to do was do it in the middle of while I had other stuff going on because me and not knowing that process and that I got to be more hands-on than I normally am with my stuff in Panama City just because of the new development and everything. But the thing is, I got a contractor that's really got a good in with the city, with the permits and all that stuff. So good times.
Nice.
Hey,
I have
Johnny,
one
I
other
had
questions, but I'm sure there's everybody's questions, so I'm just gonna be quiet. So good evening.
how you, Johnny?
All good.
Thank, good to hear it. First, I want to say thank you for giving me the opportunity to kind of join the sessions, the last few sessions. Great nuggets, although not new, was a good reminder for me to focus on. So, and just in full transparency, I think my biggest challenge is just that focus you talked about, setting that 90-day plan, and like yourself, I retired into this month so I can focus more. But you just make me realize these last 3 years, I've been missing the boat. I've been throwing money away due to responsibilities and not being focused and having that accountability partner. So thank you for that. I hope to get on board with you. I mean, like, I'm not bad, but not as advantageous as the one you're doing right now. So I got some decisions to make and some things to move around. But thank you again, sir.
No, I definitely appreciate that. Yeah, and I
Hey
think that's the
Johnny,
big thing. Like we can, as long as you recognize where you're at and continue to move out and grow with it, you're gonna be fine. What's going on, Malik? I'm sorry I cut you off, man.
yeah, I know you're good. I was trying to make sure you was finished, but as you usually pick up my calls if I had any questions and stuff. But like David said, being active duty, we lose focus a lot. And I'm moved from Washington soon. So for we just got about 130,000 just chilling. How would I go? How would I go about spreading that out? Projects such as like either a partnership or what's it called? Just getting it to work, you know what I'm saying? While I'm active duty using VA and trying to invest at the same time.
Yeah, no, I think the big thing is really looking at how you get your goal. You and the wife, you just gotta sit down and figure out, hey, what's your passive income goal, and then looking at them play between stocks, index fund, mutual funds, your TSP, and then looking at like, okay, on the real estate side, do you say kind of like, hey, you're probably not gonna be active investing with like doing hands-on with fix and flips, like, okay, how do I invest some of my money maybe in being a lender in deals, and then also looking at the multifamily side, investing like syndications and that way. And then now you're looking at like, okay, we're diversified, we got income coming from here, what does it add up to, what type of returns are we getting, and then and just kind of going from there. So I would kind of take a look at that and just understand like how much you put in your TSP, but then start looking at some of the multifamily stuff where how you can get in on some of the equity ownership and the cash flow with that as well too.
Oh, okay, thank you, Johnny. Because like David said, I didn't want to be the boat, and when retirement comes up, and I'm like, dang, I should have did this or that.
Yep, no, for sure. Great question. Great question. But I think, yeah, it's the thing you want to have that balanced, diversified portfolio and just continue to measure it and grow it. And the big thing is just understanding where you are in your investment journey and just making sure that the investments that you have, it fits your risk profile. Because a lot of times people don't understand like when they're investing, like, okay, this is a little bit more riskier than this. Are you getting the right return that's commensurate with the risk level that you're taking with some of the deals?
All right, thank you, brother. Keep looking out. Kids are quick.
Okay. No, you're more than welcome, man. Great question. Anybody else? I appreciate everybody being committed over the last 8 weeks, and yeah, definitely sharing the group in the Facebook group, just kind of your big takeaways, and so others can see it, and we'll take that feedback, continue to grow and make it, and then hopefully you guys definitely take advantage of the coffee. Some of the touch points that you'll have, I'm really focusing in on the community this year in 2025. You won't see as much out on Facebook and the recording as I kind of look at some of the commitments that I got to do with the retirement side of it, and just speaking engagements and some other things that's going that I'm gonna kind of pull back on the social media side and really focus in on the community and just continue to pour into that and helping people that's ready to go, ready to take action, and making sure you guys got the resources and information that you need to be successful. So with that, you guys know how to reach me. It's been a phenomenal 8 weeks, and hopefully see you guys inside the community. You know how to find me if you got any questions or anything like that. Reach out to myself or Faye, and yeah, and let's go. Let's make some equity happen together in 2025. I think it's gonna be, where we are right now with the new administration coming in, that I think it's going to be some really good opportunities, and we're going to be bringing some really cool things that I've kind of put together on ways to separate ourselves and add value to the baby boomer owners that are out there that are looking to get out the game, versus being able to come from a place of value to them versus just, hey, we'll buy your house for cash. And so I got some creative marketing things that we're going to look at doing with being able to add value to apartment owners that should position us in a good way to be able to pick up some great deals, build relationships, add value to these owners, and then be in a position when they're ready to sell and are ready to owner finance, where we can give them a really good proposition on why they should sell to us, that to do more deals. So super excited about that. And yeah, and we will see you guys in the morning, 8 a.m. for $1 Million Coffee. Y'all be blessed.